Hi, everyone, and welcome to Money Unwrapped.
Get excited and don't fight it, everyone. This is Money Unwrapped. We just wanted to welcome you to the second episode. You have the father-daughter team of myself, John Harrison, your co-host, and I'm a licensed financial advisor as well as an insurance professional, and I've been in the financial services industry for the past 27 years.
And the daughter, Jordan Harrison, your other co-host, and I am a licensed financial advisor and insurance professional. Welcome back to episode 2. Get excited.
Oh, I am excited.
Well, I want to tell everyone what we're talking about today because I think this is super interesting and kind of a scary topic for a lot of people.
I think that would be great if you let everybody know what we're talking about.
Well, I don't know about you, but I pay for insurance every single month, and not just one type of insurance. No, I pay for health. I pay for auto insurance, renters, maybe life. I mean, I don't, but some people do for sure. And for a lot of us, it's one of our biggest reoccurring expenses. But if someone asked you to explain exactly how it works or how those numbers are decided, do you think you could? Well, we are breaking it down in plain English for you today, what insurance is, how it works, and what you're really paying for. I think it's first important to define how we talk about insurance. So basically, insurance is a financial safety net for when things go wrong. And honestly, it's kind of what are you willing to bet on things not going wrong?
Yes, I would agree with that. You know, people don't realize the importance of insurance. And I kind of use the example of a hammer. You don't use a hammer every day, but it's sure nice to have when you need it. So insurance is kind of like that way, right?
Yeah.
You know, we don't think about something going wrong in our house, like a little fire or some water damage. But if you don't have insurance, that's going to really cause you some significant expenses. So insurance is kind of like your hammer. You don't use it every day, but it's sure nice to have when you do.
Definitely, to fix up your house.
Exactly.
Have you ever encountered anyone in your 27 years of experience who didn't have insurance and had a major meltdown in their house or with their car or a huge expense come their way?
I've never had anybody that's had a meltdown as far as their house is concerned.
Okay.
I have had some people that had what I would call old beater cars.
Oh.
That they didn't even have insurance because the car was paid for, so they weren't required to have insurance. And then the car kind of got in another accident, and so as a consequence, they had to buy a new car.
Uh-oh. I didn't know that if your car was paid for, you wouldn't need insurance. Is that still?
It depends on your state. It depends on your state. And, you know, I would tell people that insurance is great because in the last 20 years, especially with cars are all computer chips. So if something goes wrong, it's going to be super expensive. And you know what the insurance is really is you're paying pennies on the dollar to protect you from major expenses. And I think sometimes people get penny wise and pound foolish. I mean, the more cars you have, obviously, the higher the insurance is. It also comes into what is your driving record, your credit score, all those things factor in. The state you live in. Like, you know, you and I spend a good amount of time in Florida. So our insurance in Florida is a little bit higher because there's a lot of tourists, there's uninsured motorists, and that causes our rates to kind of go up.
Right. I mean, it's very expensive. And speaking of the numbers, I think it's important to talk about some statistics. So Ramsey Solutions says that auto insurance averages around $166 per month.
I really wish that was the case because that is not the case.
Oh my gosh.
In our family anyway. In our family, that is not the case.
Well, also, like you were mentioning earlier, Florida is a super expensive state to be insured. DC, where I reside some of the time, is also very expensive because, like you said, it's a city. There's uninsured motorists on the road. And also in DC specifically, I don't know if you've seen this in Florida, but the Uber Eats drivers are on bikes, like motorbikes, and they will literally weave through traffic, and it is terrifying being a driver or a passenger it is crazy that that's even allowed.
We haven't had the proliferation of motorized vehicles like that in Florida yet for Uber Eats, but we definitely have a lot of Uber Eats, and they always invariably park on the wrong side of the street.
Oh, yes.
So, I think that, again, from an insurance standpoint, that's riskier because if somebody's not paying attention, they come around the corner and somebody's on the opposite side of the street of where they're supposed to be, it's not good.
Right. I mean, also, I kind of want to talk about one of the bigger insurances, which is health insurance, which Ramsey Solutions also says that it costs an average of $625 a month in 2026, whereas employer-sponsored coverage runs roughly $1,400 a year for individuals and $6,850 a year for families. Now, I know that is not your experience either.
No, that is not my experience.
And also, we as a family are healthy. We don't have any major health concerns. We haven't had any major surgeries, nothing like that. So it's always mind-boggling to me to hear you talk about the numbers with insurance specifically.
Well, the interesting thing on health insurance is the two things that are true is the older you get, the more unhealthy you get. It's just called aging. And that affects your prices on your insurance. There's some real big life events that affect it from a health insurance standpoint. Like you're a female. At some point, you're going to get married and you want to have kids. So when you're in that bracket of potentially having children, because they know that you're going to have children and that the costs are going to be higher, your insurance will typically be a little bit higher. And then me, I'm older.
Well, you just turned the big 6-0.
I know. Get excited and don't fight it. As you know, as you get older, things start happening. And I'm in great health and I have my blood work done every 6 months. But the one thing that happens is Father Time is undefeated. So you always will have these little aches and pains. And then some people have some major health issues after 60, after 70, which cause a big expense. Health insurance is one of those things that it's very interesting, and we could get into a whole debate about the true costs of health insurance and why the costs have risen so much. But it's one of those things that, in my humble opinion, everybody should have health insurance because you just never know. And getting back to the example of a hammer, you want to have it because you never know when you're going to use it. You could be playing with your kids and your back goes out. You could be playing sports with one of your friends shooting baskets and you tear up your knee. And as we all know, the cost of medical care today is very, very high. So, in my opinion, everybody needs to have health insurance. And there are different ways that you can get it. And there's different ways that you can kind of mitigate the costs. Like, for example, our plan, as you know, is a high deductible HSA plan.
Right.
So that helps mitigate the cost a little bit. It's still super expensive, but it's one of those things that, again, in my opinion, it's not you want to have it, you need to have it.
I think that your examples were alluding to the concept of risk, which I think is super important because honestly, with insurance, it's kind of how much risk are you willing to accept? When you were mentioning the HSA high deductible plan, we're willing to accept a little bit more risk because we are healthier. Knock on wood. But, each person's situation is so different and the amount of risk that they're willing to accept is also so different.
Right. And that's how, to your point, the insurance is priced, whether it's auto, whether it's health insurance, whether it's homeowners. It's all based on risk. And what the insurance companies do, there's a lot of different factors, and they have actuaries who look at that and say, okay, if we're going to insure Jordan Harrison, for example, she lives in D.C., she lives in an apartment. Where's that apartment at? How big is that apartment? And then they'll tell you, based on that, what your renter's insurance is going to be.
Which is so interesting because I moved a few months ago, as you know, and I moved from a slightly more dangerous neighborhood.
Yeah, you could say that.
Yeah, everyone told me to not move there. Did I listen? No.
But that's the beautiful thing about life. You had an opportunity to experience And now you know.
Yes, now I know. But I remember moving from that more dangerous neighborhood to now my super secure apartment building in a nicer part of town. And my renter's insurance costs went down almost drastically, I would say, about by a quarter.
That's a great example of risk. So the perceived risk from the insurance company is Jordan's not going to have somebody break into her apartment on the second floor of a secured building. Whereas when she lived on T Street in the Shaw District, and there's the bars and the restaurants, and at night after 10 o'clock, it kind of becomes kind of dicey. There's more chance of something happening, like somebody breaking in, somebody busting a window, all of those things.
Oh yeah, I mean, I'm so lucky I got out of there with really no issues, besides
God.
a few mice.
Yeah, just a few mice, which really is what pushed you over the edge.
Yeah, it wasn't the bars, it wasn't people breaking
it was
windows.
The mice.
It was truly the mice. I do think that it's also important when we're talking about these big concepts like insurance. There are so many words that are associated with insurance that most people honestly don't understand. Before I got into the business, you couldn't really tell me what a deductible was, what a max out of pocket was. I couldn't explain it to people, especially policy limit. But I was hoping that maybe we could talk about that a little bit and define some of these terms that are
Absolutely.
really big. So what about premium? How would you define that when you're talking to someone?
The easiest way to define premium is that's the amount that the insurance is going to cost you, either on a monthly basis, a quarterly basis, semi-annual basis, or a yearly basis, however you decide to pay for it. You know, like we pay for our insurance monthly, so I know exactly what that number is. So the premium is just the cost to cover in your, what you were talking about earlier, the risk.
And the higher the premium, the
more expensive it is.
I was going to say the higher the risk, but yeah.
But you know, you say that, but that's not actually 100% true because, for example, your renter's insurance, you are not going to cause anything to happen to your townhome in
Right.
DC, but yet your renter's insurance was higher because of the surroundings. So it's not necessarily you having more risk. And like I said, there's a lot of different variables there, especially on homeowners and renters insurance. Health insurance is a little bit different because basically health insurance is based on age and health. And one thing that we all know is we all age, and we all know that as we get older, we get less healthy, no matter who you are. That's just the way it is.
Right. Well, I remember when I got insurance licensed, when I was studying for my health, there was a whole section on all of the questions that an insurance professional should ask the person who they're attempting to insure. Like, are you a smoker?
Right.
How many times a week do you work out?
Right.
Things like that that are all lifestyle associated.
And to your point about lifestyle, I know we're going to have a little bonus episode about lifestyle and how that affects your insurance costs.
Yes, so look out for that.
Yeah,
Coming soon.
That is coming soon, and it's going to be very exciting.
I think that deductible and policy limit are also super important to define.
Yes, and deductible is the amount that you have to pay before the insurance kicks in. So, for example, if you go to the doctor, you may have a copay, which is $50. That'll count against your deductible. Like our deductible, because we have a HSA plan and it's a high deductible, I think our deductible is $7,500.
Yes, that is correct.
Okay, that's what I thought it was. So we have to spend $7,500 of our own money to get the insurance to kick in.
You know, this kind of brings me to the point that I find is super interesting because you were saying that people who are healthy, usually they don't use their health insurance as much, right? As someone who is sick. But also usually that means it's younger people. And younger people usually are not as financially secure as those who are older. So
Correct.
it's almost this
Push and pull.
Yes, it's almost this push and pull of like you're young and you're healthy, so you don't want to spend a lot of money on health insurance.
Correct.
Right? But then if something does happen and you're betting on the fact that nothing will, you're going to have to spend a lot of money to fix it.
And that's, to me, that's why like we have an HSA plan, because we get a tax deduction by putting the money in the HSA. Then that money grows tax-free from that point forward. It's not a use or lose like a flex spending account. You know, a flex spending account, you put in X number of dollars during the year and you have to use it by the end of the year. HSA, there's limits as to how much you can contribute, whether you're a single person or whether you're a family. But the nice thing about the HSA is it's not a use or lose. So you can build up a little nice nest egg that if you did have a major financial expense for a health-related issue, you could use your HSA. And so, as you know, we use our HSA when we go to pay our deductibles at the dentist or the doctor. And knock on wood, we're not really spending a ton of money. But it seems like that HSA money goes every year. We max it out, and it's not really growing like I wanted it to.
I know. I'm sorry about that. I had wisdom teeth surgery recently.
Right.
That made it take a hit. I
had to have a crown.
Yeah.
You know, there's always something.
It's really dental.
It is.
But I do think it's important to note that for us, the HSA plan works very, very well.
Yes.
But that is honestly something to discuss with your licensed insurance agent.
Absolutely.
Because it is so different depending on your individual needs, your goals, your objectives, what you want your money to do for you. So definitely go and talk to someone who can help you assess your personal situations and make recommendations tailored to you.
I agree with you 100% because everybody's got different objectives. Everybody has different goals. But more importantly, when it comes to insurance, everybody has different situations.
Right.
So it's not a one size fits all, just go do X or go do Y. You need to sit down with somebody who's versed in the insurance world, who's a licensed insurance professional like you or I, for example, that can help you navigate those waters.
Okay, so you were talking about how each of our situations are different and they're unique to each of us. And also, you mentioned earlier how our surroundings also play a big role. But I want to talk about if that also changes your policy limit or your max out of pocket and how those tie into our individual situations.
It will definitely affect your max out of pocket because depending on what plan you choose, they have a max out of pocket. So our HSA, which is the easiest one to kind of let people see how this works, our HSA plan, because we have an HSA and we have a high deductible, our max out of pocket is going to be higher because we chose that HSA plan. Whereas if we chose another plan and we paid a higher premium during the year, then our max out of pocket would be lower, depending on what the plan is. And what I always tell everybody is it's really just a math problem. So you just solve it. Is it worth it to have the max? So for example, you're looking at what is the best plan for me to choose. And you're looking at, there's basically two variables. There's your premium, and then there's your max out of pocket. Obviously, with your max out of pocket, we all know that you have a deductible. So let's say you're looking at a plan, and I'm going to make this really small numbers, even though we all know the insurance is much higher.
Thank you. We love small numbers.
In some cases. But we like big numbers in other cases.
Amen.
So let's just say that Jordan is looking at two plans. One plan is $300 a month, and her max out of pocket is $5,000. Another plan is $450 a month, but her max out of pocket is only $2,000. So you look at it and you go, okay, the one plan is $300 a month, which is $3,600 a year, and her max out of pocket is $5,000. Okay. If she chooses plan B, which is $450 a month, but her max out of pocket is only $2,000, you take the $150 times 12 is $1,800, And then you take the 5,000 max out of pocket on plan A minus the 2,000 from plan B. That leaves a number of $3,000, right?
Right.
Well, most people would say, oh, plan A is the way to go, but it's not really, because it gets back to our math problem. The difference in premium is $150. That's $1,800 a year. But the difference in max out of pocket is $3,000. So if you do plan B, which on the surface looks like it's higher, it's really going to save you about $1,200, which you can use to go out and hang out with your friends on Friday night.
Hey, we love that. But I think that that's such a great way to break it down because, like you said, on the surface, it looks kind of deceiving, right?
Yep.
And that's why people need licensed insurance professionals to break down these concepts for them and to simplify it and make it understandable. It's not this huge concept that is so difficult to understand when you have the tools and resources.
And like I said, it basically is a math problem, which in a lot of the cases when you're dealing with finances, it is a math problem.
Right. I mean, that makes perfect sense. I think that deductible and max out of pocket go hand in hand.
Yes.
They're very similar concepts, but it is important to note the differences between them.
And, you know, what I think people will realize is you just have to look at what is your cash flow. And then you have to assess, okay, my cash flow is X. If I had some major medical expense in my out of pocket, would I be able to handle that? Or would it make more sense for me to have the higher premium right now so that if I did have that major issue, my max out of pocket would be different?
At this point, we've talked about both deductible and max out of pocket, but honestly, they are so connected, and sometimes it's difficult to understand the nuances of difference between them. Would you mind expanding on those differences?
Sure. So the deductible is the amount that you have to pay towards a procedure. So, for example, I just had a crown, and the insurance, the dental insurance, I believe that my deductible was like $300. I may be off on the numbers, but let's just say it's $300. And the procedure was $1,500. So I have to pay $300, and then the insurance company will pay the remainder, the $1,200. So the deductible is really what you need to pay to have the procedure before the insurance kicks in.
So it's important for people to think of it per procedure, per operation is deductible.
Correct.
Whereas
per anything that you do, even go to the doctor. I mean, they may call it copay, deductible, kind of the same thing. But, you know, like when you go to your doctor, you have to pay $50 copay. That's really a deductible.
Right. So those words are interchangeable is what we're saying.
Yes. Basically.
But then max out of pocket, you would say that that is over the whole year?
Yes, that's the max that you will pay out of your pocket, out of your little cash fund for whatever your medical expenses are. So your deductible will count towards that. So, for example, let's say that your max out of pocket is $5,000 and your deductible is $1,500. Well, once you paid the $1,500 in deductible, really you only have about $3,500 to go for max out of pocket. So, again, this is really great because this dovetails into what we're going to talk about next, which is the lifestyle. Because your lifestyle really can affect your insurance costs. For example, you know, and we'll get into this in the next episode, which is great, our little bonus here, is if you'd like to skydive, a lot of life insurance companies will not insure somebody because that is a quote-unquote lifestyle risk.
Right, surplus insurance, yeah.
Yep, exactly. So you just have to, you know, kind of look at what makes sense, and you start obviously from your cash flow and your health, and you just determine, is it better for me to have a lower premium now and have a bigger max out of pocket, or is it better to have a slightly higher premium and a less out of pocket if something were to happen?
Right. I mean, one of the main reasons why we started this podcast and why we felt so driven to make this happen was because we are holistic beings. You know, our finances and our lifestyles are tied together. They cannot be separated. And I think that it's super important to discuss things like this so that people do understand how your insurance costs aren't just a financial issue. It's a health issue. It's a risk issue. It's all of the things that we talked about. And I just think that it's so important to talk about that and create a space for people to explore those ideas.
Absolutely. And they need to work with someone who's willing to tell them what they need to hear versus what they want to hear.
That's a hard lesson to learn.
Everybody wants to be told what we want to hear, like, hey, John, you need to not take this medicine, when in reality, you need to take it. So I always tell people, you need to work with people that will tell you what you need to hear, not what you want to hear. And sometimes that's tough. Just like when you were a kid, it was tough love sometimes.
Oh, yeah. That's for sure.
We just want to thank everybody for joining us for the second episode of Money Unwrapped. As always, please feel free to email us with comments or questions at podcast@mymoneyunwrapped.com.
Thank you so much for listening. We are so glad to have you with us today. And be on the lookout for our bonus episode, The Health Wealth Connection, Small Habits That Help You Save Big. Thanks again for listening. I'm your host, Jordan Harrison.
And I'm your host, John Harrison. And this has been
Money Unwrapped. Securities offered through Silver Oak Securities, Inc. Member FINRA SIPC. Advisory services offered through Elevation Advisory Partners, LLC. A SEC-registered investment advisor. Harrison Capital Management, Silver Oak Securities, and Elevation Advisory Partners are separate entities.